Good morning, viewers. Welcome to ST Money's Morning News, your weekday business news channel. It is Monday morning, September 9, 2024, and I'm your host, Sunil Thakker of Sunny Talks Money. Let's roll. Uncertainty over the US economy's health is rippling through the markets, adding fuel to an already volatile period that has investors grappling with a shift in the Federal Reserve policy, a tight US elections, and worries over stretched valuations. US stocks tumbled on Friday after closely watched jobs data showed labor market momentum slowing more than expected, suggesting a narrower path for the US to achieve a soft landing in which the Fed is able to cool inflation without badly damaging economic growth. The Fed is expected to cut interest rates at its September 17-18 meeting, but the data revived fears that months of elevated borrowing costs have already started to pressure the economy and also left traders uncertain about how far the Federal Reserve will go in cutting interest rates. All three main indexes were lower, with all the 11 sectors of the benchmark S&P 500 losing ground. Declining issues outnumber advancers by 3 to 1 ratio on the NYSE. The S&P 500 and the Dow had the biggest weekly drop since March 2023, with the Nasdaq registering its biggest weekly drop since January 2022. So far, the market gyrations have bolstered September's reputation as a tough time for investors. The S&P 500 has fallen an average of nearly 0.8% in September since 1945, making it the worst month for stocks. The index is already down 4% since the month began. The Dow Jones Industrial Average fell 410 points or 1.01% to 40,345. The S&P 500 lost 95 points or 1.73% to 5,408, and the Nasdaq Composite lost 437 points or 2.55% to 16,691. US stocks wavered on Friday after the August jobs report slightly missed economists' estimates. US Labor Department data showed that the US economy had added 142,000 jobs in August, shy of analysts' expectations of 164,000, while jobs growth for July was revised down to 89,000, also below estimates. The report means Federal Reserve Chair Jerome Powell must cut rates later this month, but uncertain if the Fed is really ready at this point to push the panic button. Investors have to wait and watch whether the rate cut is a dovish one or a hawkish one or a panic one. Inflation data next week could shed further light on the strength of the economy and help solidify bets on how much the Fed might cut rates. Losses in leading mega cap growth stocks dragged the indexes, including the so called Magnificent Seven. Nvidia, the poster child of this year's artificial intelligence excitement, was down over 4% and stood near its lowest level in about a month, falling along with other high flying technology names. Tesla slumped 8.4%, Alphabet lost 4%, Amazon shed 3.7%, Meta declined 3.2%, Microsoft dropped 1.6%, and Apple weakened 0.7%. Meanwhile, Broadcom sank 10.4% after the chipmaker forecast fourth quarter revenue slightly below estimates, hurt by sluggish spending in its broadband segment. Other chip stocks were down. Marvell Technology fell 5.3%, and Advanced Micro Devices ended down 3.7%. The Philadelphia SE Semiconductor Index finished lower by 4.5%. The semiconductor index logged its biggest weekly drop since March 2020. Supermicrocomputer dropped 6.8%. JP Morgan analysts have downgraded AI servers makers shares to neutral from overweight. Meanwhile, the CBOE Market Volatility Index, also called the Wall Street's fear gauge, hit its highest level in nearly a month on Friday. Brent crude, the global oil benchmark, is at $71.64 per barrel. Gold is trading at $2,497 per ounce. The yield on the benchmark 10-year US Treasury note is 3.715%. That's all for today, folks. See you tomorrow morning. In the meantime, let us know in the comment section what are your thoughts for today's market. Happy investing, stay inspired, and remember, it is all about money.